Hey everyone, I'm Jeremy.
I'm Courtney.
And I'm Nicole.
And this is Kahlua, the North Sound Realty dog.
She gets nervous in front of the camera.
Poor baby. So today, today we're back with another video market report. We're going to be talking about King County again. And today we're talking about the August 2022 numbers. Today is actually September 20th because we're going to have some rates thrown in there. So I want to give you a timestamp here on when we're talking about things. So we'll give you a little intro on the rates, the numbers, and then we're going to give you a little bit of a take on what we think those numbers mean and what we're seeing. So Courtney, why don't you give us the numbers?
Yeah, let's talk about the numbers. So the stats for King County are in, and just like Snohomish County, we've seen a drastic change in the direction of the market. The seller pool is slowing, kids are going back to school, and the holidays are coming, which causes a slowdown every year. And the rates have also gone up for buyers in the last few months, which is slowing the buyer pool as well. So the average sold price is still significantly higher than last August. We are still some $35,000 higher in average sold price over last August, but much like Snohomish County, we've seen a big decrease since June. So since June, we've actually lost over $72,000 in average sold price. It makes sense when we consider the rate increases. Last August, the average 30-year fixed rate was hovering around 3.125, according to Motley Fool. And as of today, the same rate sits at 6.47, according to Mortgage News Daily. So if you bought a house last August at $1.1 million with 10% down, your monthly payment would be around $5,000. And that same house right now with these rates would cost you over $7,000 today. So our lenders actually do have programs, however, that could lower that rate, but keep in mind there are much more programs for homeowners that need relief than tenants that need relief. So if you're in the position to trade your rent for a mortgage, that's still a good move.
Correct.
I agree too.
Yeah, so from the perspective of your buyers, why don't you tell us a little bit about what this current rate environment, the current kind of environment out there with real estate, what this is doing with your buyers.
Yeah, so I currently have a buyer that's in contract. She's renting, but she is now finding someone to take over her lease, so yay for her. She's in this position where her rates were at the 6.2%, but with the lender she's working with, she's able to buy down points, so her rates are going down, and the seller is willing to help pay for those points, which is really nice.
Which is a great part about this market because the positive side of it is that you, as a buyer, are out there looking and you aren't up against as much competition. You have a little bit more leverage, so you can actually do your due diligence. You can have a little bit of help coming from the seller for things like buying that rate down, so that's a positive. Courtney, you had talked a little bit about the renters and why they should be looking a little bit positively at this. Can you expand on that?
Yeah, I have a lot of friends that are renting currently, and they ask me a lot if the rates are going up and the prices might come down because of that, is it a bad time to buy? And my answer is still, if you're putting money into somebody else's mortgage every month, you can do the math on how much that's going to be every year if you wait, that you're just throwing away. But if you have the capability to qualify for a loan, I think that putting that money into your own basically savings account is what a mortgage kind of acts as, is still a smarter thing to do. And the thing to keep an eye on is what monthly payment makes you comfortable. And if you can find a house that you're comfortable in and the monthly payment's comfortable, it doesn't have to be your forever home. It's just a place to put your money.
It doesn't have to be your forever rate either.
Yeah, exactly. You can refinance.
Right.
Yeah.
So to expand on that, just to kind of interject a little bit, if it's painful right now, but you can do it, there's a chance that down the road, when the rates come down, you can refinance into something that's better for you, and literally you're building in like an additional savings program for yourself. So
that's the thing too, is the lower rates could lower your payments, but if you continue to rent, your rent will go up. That's what happens. So it's not really a secure place to be where, you're basically just paying someone else's mortgage, and it's going to continue to go up too for your rental rate.
Yeah, so. and if you get in trouble as a renter, there's not a lot of programs that are out there to save your bacon. But
Yep.
if you have a home and you've built up equity in that home, there are programs like HELOCs that allow you to dip into that equity in tough times, use that to extend yourself out a little bit. You don't go
Totally.
into default, you keep your asset, and you keep building your wealth over the long term. So now, from a seller's perspective,
Yes.
right? Sellers are like, oh my God, I'm not selling my house in 5 days anymore, and it's not getting $500,000 over asking. Correct. But as we pointed out with those numbers that Courtney was telling us about, you're still $32,000 average over last year at this time. You're still making a lot more money than you would if you keep waiting, because the longer you wait, it's literally going down every day. So now's the time to sell, certainly, and there's still plenty of demand.
Yeah.
If the mortgage rates flex and they come down a little bit, you're also going to see a spike in demand. You watch. So, you know,
Yeah,
the main,
demand is like totally predicted by the rates, and it's crazy. The Fed
right
just
now,
controls
yeah.
a lot of
yeah,
what's happening. Yeah.
it does. You know, conversely, also, again, like I said, the longer you wait, the less you make, right? You know, in this market, you just have to be ready to do the right thing to get your house sold, though. So from a seller's
Yeah.
perspective, again, you need good guidance.
Yes,
You know,
and
so
it's
like,
worth it.
what are your buyers saying? Like, what do they say when they walk into a house that's not,
Right.
you know, right? Not perfect.
With this market now, it's like they always like pinpoint everything. So even if it's the carpet, that could cost a seller maybe a couple thousand, but in
Right.
return, it's worth it, because right now my buyers, if they come in and the carpet is horrible, we're going to be asking for seller credit.
Right.
So if you have it ready and it's beautifully staged and all of that stuff, my buyers don't ask for much,
Right.
because what is there to ask for?
Right.
Yeah.
Yeah, no, it's really kind of a difficult matrix as far as like what is worth spending on. But the longer you wait, the more you're going to have to spend to get your house ready, because the expectation of that buyer is going
Yeah.
up by the minute.
The expectation is the rates going up
Right.
more this year too.
Yeah,
So
rates
that's-
are supposed to go up. The Fed is today meeting, they're going to be likely raising the base rate by another 3/4 point. The markets are probably going to react by losing more value, NASDAQ and the Dow, and that means the investors are going to flee, which means the mortgage rates are going to go up. And yes,
That's
Jerome-
another thing for. Oh, sorry, I didn't.
No,
mean
no,
to
no,
cut
no,
you
you're
off.
okay. No, please.
Well, I just had a thought. So, you know, if that's all happening and the market is getting a little bit unpredictable, and let's say you have a landlord that has a family member that lost their house, and now that person means a lot to them and they need somewhere to live, who are they going to kick out? That tenant that's living in that house, and
Or
they
they-
don't really have anything to say about it.
Or with Washington State Tenant Landlord Act, more than likely they're just not going to renew the lease. They're going to go back
Yeah.
to being an owner-occupied property, more or less. So, but yes,
So
we already
you
know the
secure,
rents
you
are
lock
high.
in your payment, you know what you're going to be paying for the rest of the term.
Right.
You know, they're not going to raise it on you, no one's going to kick you out. It's just a secure place to be.
I mean, and to expand on that, and we can talk more, I think, maybe in another video we'll expand on this, but
Yeah.
there are programs out there where your monthly mortgage payment does vary, because you have what are called ARMs, adjustable rate mortgage programs, that sometimes they're a little bit of a gamble, but they can help you save money up front if you think that the rates will eventually go down, which
Yeah.
you know, we do believe that eventually, as the market balances out, the rates will settle in at a better level.
Yeah.
Yeah.
Okay.
They will eventually.
Yeah, that's
That's how
our
it
prediction.
works.
We're not
Yeah.
guaranteeing. It's our prediction. Anyhow, you guys are awesome. Thank you so much for having this little
Yes,
roundtable with
this
us.
was fun.
Yeah. Thank you for joining us. We value you like crazy. If you need
We
some
do.
help, please reach out. We're here
You're a
for
great
you.
team. We'd love to
Yep.
help you.
Yep.
We're ready for you guys.
We're ready. Thank you. All right.
Bye.
Thank you.